You should talk about your book, by the
Sure,
way, that
okay.
it's published. Yeah.
Can you hear? Now?
Yeah, perfect.
We're good? Are we back on?
Yes, we are.
Okay, we're good to go. Yeah, sorry, I think we had some technical difficulty there, just to get going with the sound. So we're back on, and yeah, so we're just saying Artie is down for the count. He did a YOLO trade this afternoon, wiped him out, and he just jumped out the window. So, just kidding. He's off looking after his teeth and this afternoon. So you're stuck with myself, Brian, Bearable Traders, and of course Andrew as well. So we're just here looking at the market action as we go out the end of the day. Andrew, how was your day today?
My day was pretty good actually for day trading. This morning I woke up again. These days I wake up really late. I woke up, came in, saw a couple of volatility. I got stopped out badly on NEO, but eventually survived on AMD and TQQ move. I'm surprised that the Qs went green. You can see Santiago showed the trading terminal on Brian's screen. The TQQ was green for the day, and now it's just down 7% because Qs are down almost 2%. That's
you can see here we kind of jumped up on all the indexes except for the Russell.
The Russell, yeah, Russell is really lagging. So the markets apparently is trying to break out of that channel that they had, and it's a little bit scary, but it is what it is. So tomorrow is the inflation day, and that's on the mind of pretty much everybody. It has to go into the right direction. A lot of people are asking, has the market bottomed? The answer to that is we don't know. That's $1 billion question. But market bottoms only when the macroeconomic indicators are starting going into the right direction. And the inflation is the number one that everyone is looking at. And inflation, if inflation starts, it never goes into 2% right away, but if it comes down into the right direction, that changes the whole policy and the Federal Reserve approach toward financial tightening. So we'll see tomorrow. There's a very important numbers were coming in. Expectation is to be around, I think, 8.3% or something like that.
Yeah.
But we'll see what it comes. What do you think Brian is going to be?
Well, Artie and I were just talking before he left, and I kind of have a, I could be wrong, and I don't like to make bets on the market, but I kind of have a feeling that the number's going to come in positive for the market. So in other words, we're going to see continued maybe lower inflation, or at least it's not going any higher. So that's kind of my guess. And again, I don't like to guess and make investment bets based on guesses, but I kind of feel like inflation may have at least peaked and just sort of flattening here. So if we do see that, flattening, we'll see what the market does. If we see a little bit of relief, any kind of relief at all from inflation, I think the market will take that as a positive. And because, the number of Fed speakers have been on talking about how they're not looking for one number. I think the last number they got was encouraging, but they're not looking for one number. They're looking for a trend. So that would be 2, 3, 4 numbers that indicate inflation is cooling off a little bit, and then they might change their stance. But right now, still looking for a half point in June, still probably another half point in July. The ECB seems to be moving that way as well. So we're still in a bit of a skittish market here, and you can see here we've sold off pretty hard in the afternoon when you look at all the indexes.
I want to take a look at SPY on my chart right now. So for almost 2 weeks, if you look at my screen, so for almost 2 weeks we were trading in a fairly narrow range, but very volatile. It's the moves were really strong in a very volatile days on ups and downs, and you see the candlesticks are very strong, especially in the bullish days. And now today we finally broke down this one. So now the question is if the moves are continuing toward this 390 level, or tomorrow we're going to have another engulfing day that is going to go back up. And we had that pretty much almost every week, something like that. So if you want to go back in the past, you look at, for example, for the days that the market is, reaping higher and you think you're breaking out from that range, there's suddenly a huge sell-off is coming after that. So really nobody knows. And if you want to short right now to go back to this support level, you should also expect days that, you can rip higher as well. So we had that, for example, you're gapping down here, and then there's a rip coming here. So market is in a very, very short-term sentiment mode. It means that anything can just completely shift the direction of the market. And that's one of the characteristics of bear markets, that the moves are very, very strong.
Yeah, one way and then the other. And it makes it, I've had a number of emails from traders saying, I'm having trouble making any gains in my account. I'm up one day, down the next. And that's, is that typical, or is that, or am I doing something wrong? And I would say that's, it's kind of easy when everything's going one direction. Particularly, it's easy when things are going up, and usually up is, stair-stepping up. So it's easy to make money in that kind of a market, and that's what a lot of people are used to. Certainly, over the last 3-4 months, the market dynamics and have changed dramatically. And as Andrew says, we're getting a lot of volatility, and it's much more challenging to make money in a volatile environment. So, I think this selling. I mean, I could be wrong on it. I don't think there was any specific news on this selling. I think there's probably some nervousness going into Friday morning with release of these numbers, and it's maybe people exiting positions, what have you, waiting in anticipation of this number and nervousness about this number being released tomorrow. Did you see anything that would cause this?
Not really. I personally don't see any specific news on the market that it's selling off. But again, tomorrow is going to be a big day, and inflation day is very, very important. It wasn't important until last year, but when the inflation then out of the control has become one of the very important events that can change the market. And again, it's a little bit also hard to see what the market is doing. If the inflation numbers come very high, not good for the market. If it's the right direction, again, do we expect a rally? Can we say if the numbers are significantly lower than expectation, do we see a rally?
I think so. I mean, it could be that there could be still a lot of people that are positioned short in this market, and if we do see a let's call it a more significant reduction in inflation, I think that's really going to light a fire under some of the buyers. But again, it's going to be a matter of what the number is, and again, it's a binary. It's going to be a binary event. It's either going to be good or bad, and the markets, I think, are going to react. I think predictably.
Yeah. Go. If you can show my screen, Santiago, we have on the Friday. So if you go to our calendar, there's a calendar tab. If you go inside, there's an economic tab. If you click on that, then you can see, the core inflation year over year and inflation rates of year over year. So there are different type of reading for inflation. And we have the month-to-month inflation as well. So I think the core inflation, the estimate is 5.9%. The previous one was 0.62%. The inflation year over year, the estimate is to be 8.3%. And the previous reading was 8.3%. And month over month, it means that May compared to April or April compared to February will be only 0.5%, which the previously was 0.6%. So let's see what the actual numbers are coming toward that, and because that's very, very important. So at 8:30 a.m. on the Eastern time, these numbers come. So if you want to take a look at it, there are some other macroeconomic numbers that are coming, but I think the most important ones on Friday, as you see here, that all impacting U.S. market is the inflation numbers that are releasing at 8:30 in the morning.
So yeah, if we, I just thought we'd take a look at how the sectors are performing, and you can see on the trading terminal here, you can look at the sector performance, and you can see obviously staples performing the least worst of the group. So everything is in the red today. And you can see why the SPY is down. The SPY is really heavily weighted to technology, communication services, and you can see these are the two sectors that are really taking a hit today, and that's sort of amplifying the downside that the SPY is seeing. Things like energy, which isn't quite down as much, is only a small fraction of the SPY overall. So yeah, that's again probably contributing to this downside that we're seeing. Really, technology, and of course these would be the interest rate sensitive stocks, the high growth stocks that don't that really fall out of favor when interest rates are high. So we seem to be continuing to sell off here as we go into the close. So
something that is very interesting, Brian, when you were mentioning that is, if you look at my chart, normalized market performance here, I noticed there's something very interesting. So the market, as of today, for IWM, which is Russell 2000, is down 20%, which is significant. Qs are down 10%, which is, although bad, but it's not crazy. And SPY and Dow is really down only 4 or 5%. They're significantly down toward their highs, all-time highs. But since 1 year ago, they're not that bad. But the issue is, if you look at, for example, Qs, starting from right now, this year, we had a really, really big rally going up. And if you cannot, if you stay around this level and they end the year like that, then the market can be as down as like 30% or 35%. If you cannot sustain a rally to that, and that's a very, very significant drop for the per year. Mm-hmm. So, as you see, especially Qs had a really almost a 20% run all the way to the end of the year. And if they cannot sustain a rally, then they might close the year like 35% deep into the bear market territory.
Yeah, again, it's the interest rate environment, the inflation rate that could really have a significant impact on this sector that tends to have high PE ratios, and as their earnings drop, the PE ratios go even higher. So you have to keep dropping the price as well to maintain the PE ratio, let alone look at it from a discounted perspective from what they would be getting like a year ago. So this is the challenge that obviously we have with the Qs in particular, and with the IWM. as Andrew mentioned already, the Dow, the SPY, they tend to have more established companies that have dividends, and those are the companies that are going to hold up a little bit better in a market environment like this. So anyway, again, we just keep selling off into the close. There just seems to be a lot of nervousness here.
So there's something very interesting that I wanted to mention, that is most of the people my age, millennials and Generation Z, we didn't see a multi-year bear market. Most of our lifetime, our financial investing was during the bull market. Because we never saw dot-com bubble. The dot-com bubble bear market was almost a 3-year bear market. And, the multi-year bear market is something that I don't know. I mean, I don't want to accept, but we might need to accept that we might have something similar to that if we really continue going to do that. Like, for example, if you go to QQQ, when you go down, this day I was actually looking at it today for my newsletter that I sent to all of the users that we have. If you go down, since 2003 all the way up to even 2020, we had some dips, but these dips were small. And then the mother of all of the V-shaped recoveries was March 2020 for the pandemic, that we dipped, but in the very only short couple of weeks, we completely rallied back, came back to normal. But when you look at even 2008, really that drop was only a few months. The mother of all of these bear markets was actually dot-com bubble. If you can look at my chart, we peaked at around January 2000, and then we had a significant drop. And then we had two rally of almost 50% to get out of that position, and then almost a 2-year bear market started, which is very, very, very.
Yeah.
I had this conversation with Peter, and Peter mentioned that to me, that you guys always used to all-time high, and when we are the generations that we remember the time that the market for 2 years were in downturn, all the way up to the around the end of 2002 when the market bottomed, and the next bull market started.
Yeah, and I guess kind of revealing my age a little bit here, but I'm sure Peter maybe was trading a little bit, or certainly had stocks in the market during the dot-com bubble, and that was really when I started actively trading during the dot-com bubble. And as I've mentioned before in my books, I did trade through that. The internet was kind of new, and every company had that was out there was putting a .com after their name, and that was adding 100% to their market cap just by doing that. So it was crazy times on the way up, and it was easy to make money on the way up. But then on the way down, it was painful. So made a lot of money, and then pretty much gave it all back as the market rolled over. So so I've seen these happen before. So it's going to be a matter of a question of where things are going to go in the economy. It's just going forward. It's really difficult to say. We've got all sorts of cross currents going on. We've obviously mentioned the wars numerous times, and that's having a pretty significant impact on the globe right now. With food shortages, and that seems to be getting worse. And inflation running pretty hot. So we'll see if we can navigate our way out of this. We may actually go back and test the lows of that we saw maybe a month ago, if inflation comes in hot again this time around.
Yeah, so. Very exciting. I know King Yedida, how are you, buddy? And thanks for suggestion. Now, speaking of our mastering trading psychology, I just want for those of you who know and follow us, Brian's new book is out. It's really, really well written, really nice charting and everything. And if you are interested, guys, go check out Brian's book. It's already a bestseller in investing, but I highly recommend for those of you who are interested, go. I'm just trying to put the link here that you guys can go and check it out. And we appreciate the support of the community by buying it and writing your honest opinion on that. Yes. And also give us a thumbs up because of Brian came all the way to the office to do this. He paid probably $7 for parking, and because parking is really expensive.
Yeah, more like 15.
15, yeah. So it's really expensive down here. So thank you so much, guys, for that. So
anyway, we have some earnings after the close. I know Artie has, even though he's not here, he has put on a trade with DocuSign. So I think we've got DocuSign reporting after the close today.
Yeah, I think he wrote a straddle, but more onto the put side, so he's more bearish. If you don't know what the straddle is, go to Education Center. Ali has courses and webinars on that. But before getting to DocuSign, because you still have 7 minutes to the market close,
okay.
I want to talk something. If you show my screen, SEC recently proposed a big change on how the brokers are dealing with the orders from traders, especially with retail traders. And that can impact companies like Robinhood.
Yeah.
And I think they want to modernize the rule about the order routing and conflict of interest. And the way that apparently works right now, when you give your order, buy me AMC or GME or Apple, this order goes into a broker dealer, and the broker dealer pay back the brokers as a rebate, and then they get they use that to match the best price for themselves. And there is one element that traders might not get the best feel and the most favorable price that they can get. And now SEC is again, if you show my screen, SEC proposing some changes that the wholesalers like Citadel Securities that buy all the orders from Robinhood they have to go through an auction and offer the best price, and that impacts the business model of the free commission brokers like Robinhood or Webull, that they're essentially making money by selling your orders to the wholesalers like Citadel Securities instead of sending it directly to the exchange to get matched. And that's a big thing about the Robinhood, and there's a lot of opposition against this SEC change. What do you think, Brian? What do you know? Explain to us a little bit about that.
Yeah, I mean, it's they refer to it as payment for order flow, and that's basically what a lot of the brokers are doing. They're selling they're taking their order from you and selling it to a company like Citadel. and they're getting the fill from Citadel, and then Citadel's paying them a fraction of that money back. So that's really how the Robinhood model works. Is they're not charging you a commission, but somebody's got to pay. So they're the argument is that the retail buyer is not getting the best price, but on the other hand, they're not paying commission. So there is an argument that says that if let's just say before you were paying $5 to put in an order to buy 1,000 shares of IBM, if you had a good rate on like a TD or whatever. So maybe the cost to you for not getting the best fill might only be $1, or it might be $2. So I think that's one of the arguments they're saying, is that the retail investor is still coming out because they're not paying a flat fee. But I think we talk about Robinhood doing this, but then of course a lot of other companies to match Robinhood's offering have gone to a zero commission with a payment for order flow revenue model. So I think Schwab and TD Waterhouse, they've gone zero commissions. I'm not sure. I know there's others that have. I can't.
Yeah,
remember.
even Interactive Brokers have gone free. So there's what is the SEC saying? If you look at my screen again, the SEC believes that this was in the benefit of traders. The industry, which is obviously Robinhood is the leader in this industry, is saying that this model, have generated billions in revenue. I want them to see that. If you show my screen, I want them to read that. So the current model has generated billions of dollars in revenue because people are getting into the market and trade, and turn millions of Americans into investors. I don't know if it's a good thing or bad thing. Essentially, everybody was involved in 2020, 2021 into the market, from the grandpa all the way to sophisticated scientists. And now, by killing this project, they might actually, a lot of people not trade anymore because they're undercapitalized traders and they don't want to get paid $5, $10 or commissions, and these people are going to go out. And the chief legal officer of Robinhood has said that the fact that you're saying we don't want these people in our market, it's actually not good. Can you show my screen? Stay on my screen, please. Stay on my screen. Yeah, stay on my screen because I wanted to see that. Yeah, because when there's text, it's good to people to be able to read that. So that's something. Quickly, I just want to show. Stay on my screen because I want to see what the Hood actually doing. After that news came in, the Robinhood is getting already destroyed. In the last couple of days, if you go to the daily chart, it's definitely at $8. Apparently there is no bottom for it, and it's going through the lows of 780. This is a very, very sad story for Robinhood, that it was trading as high as $90, $100.
Yeah, I know, and of course, if this goes through, I mean, if there's no more front running, trades, then obviously, companies like Schwab, TD Waterhouse, I mean, all the brokers that have shifted to a zero commission model will obviously have to go back to charging just straight commissions for trades, whether it's by the share or whether it's a flat fee. In Canada, when you were trading on the Canadian exchanges, we never had a zero commission. It's always been $5 a trade or whatever.
It still is, huh?
It still is, yeah.
Jesus.
Yeah.
Anyways, so I think the market is almost is closing. I think Adi prepared one material, Campbell's earning. So I don't know what Campbell is, but there is one thing. Let's go quickly see what the market is doing. No, let's stay here. Jim Cramer says no interest in crypto out here. Amazing skepticism. So Jim Cramer thinks that crypto is dead. I personally think crypto has a long, long way to go back up. The confidence has gone out of Twitter, but a lot of people say Jim Cramer, you do opposite of what Jim Cramer says. That's one thing that it says. And
actually, speaking of him, I thought it was funny. He came last week. I was listening to him, and he said something about how he thought Elon was a great CEO, and then he went on to talk about how he tweeted that thing out on Friday about how he had a bad feeling about the economy. He was cutting 10%. And then on Monday, he tweeted out that, he wasn't going to do it. And And,
Oh my God.
you know, and he was going to buy Twitter, and he's good with their number of bots, and now he's not good. So I don't know. I mean, it doesn't sound like someone who's financial or is mentally stable, but
not great. So the market closed. Really bad day for markets. So SPY closed 2%, QQQ closed 2.6%, if you can see my screen, and IWM down 2.1%. Again, all of them are essentially correlated. IWM 2.1%, Google down 2%, SPY 2.4%, and QQQ 2.7%. Apple had a really bad hit, 3.6% down from the green. And Tesla was really strong in the day. It was up because he had some good news coming from their production in China that apparently were up, but they lost all the gain. No one survives this kind of
when it's,
market.
Across the board selling.
Yeah.
So we'll see. Like I said, we've got Docu after the close, and
yeah, let's see what Docu is doing. I mean, let's see what the earnings coming. It seems that it's popping a little bit. Ardi had the trade on it, but more on the bearish side. CPB, that's one thing that Ardi
Campbell's Soup.
Yeah, Campbell's Soup. Yeah, that one is still something that we'll see how it goes. Nothing yet. DocuSign was the big one. So there was a pop, but that pop doesn't have a lot of volume, so it's hard to really say that this pop is because of the earning. We'll see how it goes. The KSS had earnings too. Anything? Oh yeah, KSS is popping up 3.6%, but again, not a lot of volume. It's only 2,000 shares that pops up, you know, and that 2,000 share really doesn't mean anything. So it's really hard to sometimes find these moves meaningful in the pre-post market. It has to follow by certain activity.
I think you have to. There's always some activity after the hours, and even before they release their numbers. I don't know. I don't know why people jump in and out before the numbers come out. And then sometimes you'll find the first reaction isn't the right one. Sometimes you'll find that they'll release their numbers, and then the CEO or CFO will start talking, and you know, next thing you know, they're saying that they see a slowdown coming, and you know what could have been good earnings and good guidance or good earnings, and all of a sudden turns into a negative print. Just because of some of the comments that the CEOs or CFOs are making. So you have to be a little bit careful, especially now with the environment we're in. So
yeah, definitely. So until the numbers coming out, Adi has prepared some stuff for us. This has been if you show my screen and stay on there, this has been the fastest decline in U.S. housing affordability in decades. And this chart, I'm going to try to see exactly what this chart is saying, that the affordability was really high during the 2008 crisis because the prices were down. And since the beginning of the pandemic, the prices has gone down significantly, and the affordability is down really bad. So that's a very interesting very chart that we're seeing right now. And you know, it's funny because I have a friend, and I was talking to her last night, and she said that she can't sleep. And I said, why? What's the stress on your mind? And she said that I have not purchased a house, and I'm really worried. So even though she has money, even though she has access to mortgage, and so the fact that has missed out this big move on the housing market, it just makes her not sleep well. And that shouldn't be like that. You know, that's not a healthy market. I know when the housing market goes up 20-30% year over year, you know, the house owners are really happy, but it's not a healthy environment.
No. Yeah, I mean, and of course markets are different depending on where you are. Some markets are hot, some aren't. You know, in Vancouver, the West Coast, it's, you know, we've had a pretty buoyant market for so many years, and you do see these surges. What I've seen over the years, and I've, you know, been here for quite a few years now, you see surges, and then once the surge kind of dies down, prices pull back a little bit, and then they kind of flatten out, and then they don't make any headway for a number of years, and then all of a sudden, you know, 5 years later or whatever, there's this next surge. So hopefully, I think we've gotten through this surge. I think we're looking at some either pullback and then some flattening out. But the problem is, I don't think, you know, they're not making more real estate. So especially in sort of Vancouver area where we're constrained by mountains and livable space, livable area, buildable area. So again, it's somewhat location dependent. But yeah, it just seems that's the way the real estate market goes. It surges, plateaus, pulls back a bit, consolidates, and then we just wait around a few more years for the next surge to happen.
So we see DocuSign, some activity on DocuSign right now. Looking at my chart, if you look at it, so it went down as significantly, down as low as 10%, 11%. I'll see how it goes. Some volume is coming in there, but if it continues this move down, Ardi is going to make a lot of money tomorrow. So because he had a big position on it.
So the way Adi played this, and he had a bearish sentiment on this stock, so he bought 2 puts and he sold, and he bought 1 call. So he kind of hedged his bet, but biased to the downside. So when you buy a put, you're expecting the stock to drop. When you buy a call, you're expecting it to rise. But he bought more puts than he did calls. So the calls obviously will reduce in value for him, but he'll see a significant increase in the value of the puts as the price drops.
Yeah, very significant. If you guys go to trading terminal, you can have the Benzinga breaking news, and if you can you can actually hear that, and it says in real time. For those of you guys, if you go to trading terminal and start listening to Squawk, because they mentioned that what's the earning per share and whatever it does. And if you're not, you can also go to the breaking news that we have, and you can actually see what is happening and what they're trying to, the breaking news will come out.
Yeah, so you can see that on my screen here. Here's the breaking news. Here's the breaking news button on the trading terminal, Bearable Trading Terminal. You can just press that here, and so you can hear. There's some talking going on now. You can't hear it.
Yeah, so I'm in the, so you can, go, Brian, you can go to the news tab on the menu bar and come down. In the latest news, right now we're seeing these breaking news are coming out. So if you come down a little bit more, you can see that DocuSign sees actually missed the earnings. I was reading that where is that? Let me.
Yeah, it says Q2 sales 604 million versus 600 to 604 million. That was versus the 601 million estimate. So they kind of came in.
Earning per share is 38 cents, while expectation was 45 cents.
So that's a big miss.
Really bad miss. And if you miss that, definitely you're going to have some trouble finding better guidance. So the market usually reacts in the earnings in 2 ways. It's either the numbers, the beating or not beating the expectation of the analyst for that quarter, and also for the guidance.
Turtle Beach extends partnership with Gen G.
Yeah, so that's what, if you're hearing that, that's the Benzinga Squawk. It's a really, really powerful tool if you want to get that as well. So yeah, DocuSign 16%. Ad is probably right now under the dentist checking that, is getting the feeling. But he's probably up $5,000-$6,000 in his account. The
dentist is probably saying to him, "Stop smiling, stop smiling." So
so that's.
But this is all part of the trading terminal that Bearable has developed and set up. So lots of tools, lots of tons of information, everything from market overview to breaking news, whether you want it when you want it on audio or whether you just want to watch it as it comes out here on a feed. So just a really powerful site that we're continuing to develop.
Yeah, so again, we'll continue developing that, and there's some bugs. There's a lot of bugs on that, but we are working on that. And as we grow, we want to just slowly add more and more material on that. Guys, I know 130 people watching us. Thank you so much. That's a great number. It really motivates us. Give us a thumbs up if possible, because we really want to see how many of you are paying attention. And as you support our channel will grow, and we really, really, really want to get more. And Brian, again, he paid $15. Somebody got to support him for that $15 parking. So give him 10 thumbs.
A thumbs up will be worth $15. Or maybe 10. 10 thumbs up would be great.
Yeah, nice.
So that's it, I guess. Do you have anything else you want to add before we kind of move on? I think KSS, I don't think they had earnings, but KSS, you mentioned earlier, still sort of under a buyout watch. There's a vitamin company that seems to want to take over on them, but yeah, they still seem to be in play anyway.
Yeah, so Airbnb also down. I don't have anything special on the presentation. Airbnb was sold off as low as 6.5% because, again, the economic concerns, pressures, people. Like, I have no financial problem, but I just don't want to travel now. I want to focus on my work and business. And, that the stress of inflation, that the stress of a possible recession makes people anxious. And, it's just all across the board, I can feel it myself, and definitely Airbnb is selling off. And the ones that are more, toward discretionary consumers that people try to avoid, like travel is something that people can avoid, and that's why they're getting hit really, really bad. DocuSign recovered a little bit. It would be nice to see what's going to happen tomorrow, but it's slowly recovering. But I doubt that DocuSign is going to be green for the day. It's definitely stay around 15% down. I'll see how tomorrow is going to be. I think it's probably tomorrow going to go even lower.
Yeah, and Stitch Fix I guess reported, and they earnings per share they were negative 72 cents versus the 55-cent estimate.
I cannot believe, Brian. I cannot believe that Stitch Fix is at $7. We were trading this last year in the range of 50s and 60s.
Yeah, I know.
This is absolutely, or it went up all the way as high as $120. This is absolutely nuts. Yeah. Absolutely nuts.
This was when there didn't seem to be any. You couldn't. We were talking about the F word, the fundamental word, and there was just no way to justify the levels of prices that these stocks were trading at that time, but it didn't seem to matter at that point, and that's kind of what happens in a raging bull market. Nobody pays attention to the fundamentals. It's all about the momentum. So
yeah, they call this, a lot of this call them zombie companies because they're really half alive. They don't produce any revenue, and if they do, it's not even enough to pay their interest on their debt. And in the financial tightening environment, these ones are belly up the first, and that's exactly what we're seeing at this. Stitch Fix down 20%, unbelievable.
Yeah.
Okay, well, so what else do we have? Anything from the chat before we get? AMD is definitely going to be in play tomorrow. It's going to be an amazing day for trading. So for those of you who are staying, I know Brian, he's very nervous about his car and his parking. But
no.
Again, guys, if Abiel, you can share the book that Brian, he spent a lot of time on it because it's a long process writing a book, going through the editing, and hopefully you can read, you can learn something from it, and we appreciate your support on that.
All right. So that's it, everybody. So I guess unless there's any other questions from the room, we'll certainly be anxious to see what number comes out tomorrow morning. And
yeah.
It'll be, I might wake up early for that one.
I would definitely try to be in my trading station early to see if we can play around a little bit. And hopefully the numbers is in the right direction. Not only because of the stock market and volatility, but it's the economy goes back into the right direction, prosperity for everyone, and continuous growth.
Yeah. Yeah, we're all hoping for a good, a positive number tomorrow, which would be a more negative print on the inflation reading. So. Looking for a drop there, hopefully.
Okay, thank you so much, guys. Have a good day, and feel free to reach out if you have any question. Andrew at BearbullTraders.com, Brian at BearbullTraders.com, and we are on Twitter at BearbullTraders, my Twitter. Ardi is on Twitter as well. Brian is also at Brian_Pezim, so feel free to follow him. Tag us, DM us, and we're happy to engage with you guys. Like us, subscribe to our channel, and see you tomorrow morning. 8:30 for inflation number reporting.
Right on. We'll see everyone tomorrow morning.
Awesome.